Good afternoon, all. It's Shane White from STK Markets. Some of you will have known me from prior investor events. I've been a long-term 708 investor and done quite a bit of business with Sean over the years. And he got me in a headlock recently and finally convinced me to join the team. So here I am. And I'm here today with Mark Saxon, Executive Director of ACDC Metals. Good afternoon to you, Mark.
Shane, good afternoon, and hopefully the headlock wasn't too painful. And Sean can be a convincing guy, so yeah, I'm sure you're gonna have a good time with him.
He's very, very convincing, particularly over a cold one or two, as we all know and love with him. But no, very happy to be on board and along for the ride. And of course, full disclosure to you and those listening, I'm a shareholder and got in with the team at the float. At 20 cents. As we know, we've drifted a little bit, 15-20% since then, but we're doing a stack of buying for clients and family offices at around this level, 16-17 cents. And again, I've put my hand in the air and I bought a whole bunch personally at 17 and at 16 cents. Even in recent days, we see great value there, but that's okay for me to say that. Off the back of that, what we'd really like to know is why is that good buying? And from you, Mark.
Super, yeah, we can touch on all of that today, and I think we've got plenty of time to talk it through, Shane. But I suppose as a headline, ACDC Metals is the right company at the right time, and I suppose what does that mean? Lots of companies say that, but we can look at the macro that we're sitting in at the moment, which is the energy transition macro, which is creating opportunities for a whole range of different metals and materials. So we can look at cobalt or lithium or graphite or copper. And we add to that list at every single stage rare earth elements. And rare earth elements are a curious and relatively poorly known market, but incredibly important when we think about the energy transition. And that's the space that ACDC Metals is playing in. We have some very strong projects in Victoria, mineral sand projects that are very rich in rare earths. And then I guess we're pairing with that technology that we have imported or integrated from Canada, and which, yeah, in particular, that's dear to my heart. I was the CEO of the company until recently that is providing that technology, so I know that really well. And so when we pair the mineral sand assets in Victoria with the technology of how to extract maximum value from those projects, then we're looking at a really, I guess, unique and interesting offering, which I think will do really well over the right time.
Okay, that's fantastic to hear. And I think, so what I'm hearing, the point of difference here is that, you know, you've got a really good asset in the ground. It's been there for many years. Obviously, it's been drilled before, back when rare earths weren't so popular.
Sure.
But what makes this different from others out there is the technology and the way you can bring it to the market.
Yeah, exactly. And I guess, yeah, to touch on a few points there, we've got a number of mineral sand projects and they're all pre-resource. However, they've all had lots and lots of work done on them. And in particular, that really started, I guess, in the 1980s into the 1990s by, at the time, it was CRA Exploration, which now is Rio Tinto. So they were exploring all across what we call the Murray Basin, sort of a geological area in Victoria that all of these mineral sands sit in. So they explored side to side across the Murray Basin and drilled many holes and identified these mineral sand assets. And those mineral sand assets are now owned by a range of companies, including ACDC Metals. Many holes and a great knowledge. But at the time when that work was happening, I guess there's two key differences. So in the 1980s and 90s, the ability to extract and separate mineral sands from finer grain deposits didn't exist, whereas today that does exist. So we can now process these sands. And I guess even more exciting is the rare earth component of those mineral sands. So when CRA Rio Tinto was doing the work in the 1990s, the rare earth industry was tiny, really almost irrelevant, because rare earth magnets that consumes most of the rare earths today, or most of the value of the rare earths today, barely existed in the 1990s. They were only discovered or developed in the 1990s. And so really there was no market. So why produce a metal that there's no market for? Of course you don't. So rare earths really wasn't a thing. It wasn't seen as valuable. And so it's only now, sort of, as companies, including ourselves, go back to the projects where we can say, okay, monazite, which is the mineral that hosts the rare earths, instead of calling it a liability, we can now call it an asset and a great value add to the projects. And so we're seeing a number of different companies are in the process of achieving that. And ACDC is one of those. But as we touched on, I guess the real stand apart for ACDC is the technology partnership. And that technology partnership was with a Canadian company called Medallion Resources. And Medallion has had a very long history, a 6 or 7 year history in developing technologies to process and extract rare earths. And so the connection, I guess, came from having assets in Victoria, having my knowledge and connection in the rare earth industry in Canada, and we managed to bring that across. And so ACDC has an exclusive license to use the Medallion technology to process rare earths in Eastern Australia, Southeastern Australia. And so that's where you go from, I guess, having low value materials into high value materials, where you're really able to step up and maximize the value of the rocks that come out of the ground or the sand that comes out of the ground, which is a real opportunity for ACDC and for Victoria, South Australia, for Australia as a whole. I think it's really important we do that.
Yeah, it's fascinating that, going back to your earlier comment about monazite, something that used to be thrown back in the hole in the ground or stockpiled is now quite valuable. But moving to the technology, people talk about technology. Of course, it's a bit of a buzzword. But firstly, what is it? What is the actual technology? What's it do? And secondly, what's stopping a competitor from going out there and replicating it? Medallion's technology.
Yeah, no, great questions. And so the Medallion technology was particularly developed at a location in Canada called the Saskatchewan Research Institute. And so Saskatchewan Research Institute is a place that very similar, I suppose, in Australia to ANSTO, which is a government-owned laboratory. And so Medallion funded a whole lot of R&D and test work there based on Medallion processes and test work in Saskatchewan. And so really what we're talking about when we discuss the technology, so this is a little vial of sand here. It's not going to show up very well, but a little vial of brown sand, and that's monazite. And so monazite is a really rich rare earth mineral. It hosts about 60% rare earths in that mineral. So we've got to break that down through a process that we want to have as a let's call it environmentally friendly, low footprint, low CO2 process. So the Medallion monazite process has taken really a Chinese technology, I guess, and then optimized and intensified a process that's operating today in China. And so we do a caustic cracking process, and the caustic cracking process dissolves that brown sand and turns it into a rare earth carbonate, as we see here. And so we extract all of the value out of the rare earths. The monazite. We extract the rare earths. We extract a phosphate product. We extract uranium and thorium as well, which goes to market or goes to waste. And so we do that in a really process intensified manner, which allows us to capture the reagents, capture the heat and the energy that's coming out of the process, and to ensure that we have the smallest possible CO2 footprint, and also the smallest possible energy footprint, which gives us the lowest cost as well. So it's a competitive process. It's been well tested in Canada. We are moving towards a pilot plant with Australian materials, but we understand the process really well. And I guess the history of the work means we understand the energy required, we understand the equipment required, we know the chemistry, we know the waste materials, we know the people required to run the process. We know the land area that's needed. We know the transport networks and everything else that supports that business. And so we're able to move quickly now to say, okay, where do we want to operate? What's the best location? How do we build this, and who do we need to employ, and what chemical services and support do we need standing behind it? And that's multiple years of work. And that allows us to sort of jump ahead of any possible competitor and really start to talk about sort of the real the fundamentals of the business now, rather than just as a concept. We have all the data we need to talk about it as a real business model.
Yeah, okay, that's great. And I love that, having Medallion in our corner as a major, as a shareholder, and having IP in the game and all that type of thing. It brings so much value. You talked about that, moving towards a pilot project. What's that look like in terms of time frame, location, cost? What can we as shareholders expect there?
Yeah, sure. Yeah, so in pilot plants in the mining industry, I guess you want your pilot plant to match the material that you're going to be processing, and so that's the key factor of a pilot plant, and so it gets out all of the last little uncertainties and things in a process as you scale from bench scale into commercial scale. So the pilot plant for us in ACDC, and I guess there's a number of different steps we can talk about, but the first step is the mineral separation part. So that will be done with Mineral Technologies, which is a company based in Queensland, in Carrara, and Mineral Technologies are the group that does the separation of all the different minerals in the mineral sand. And so when you think about mineral sands, they're not just rare earths, they're not just monazite, but we have ilmenite and rutile and zircon and monazite as well. All of those things will have their own marketplaces. And so the first stage is to separate those out and get them to be market ready. The second stage is then taking the monazite product and taking that through into the monazite process, into the medallion process, and then doing the final continuous test work on that process and testing some of the key features of the process with real life materials that are absolutely reflect the projects themselves. So we're building towards that now with our drilling program. We're collecting samples which will build up the bulk sample for us to do that mineral process test work, and then as part of that process, it'll go through to the monazite process. In terms of money, we're talking $2 or $3 million, I guess, to move through that process.
Yeah.
The work will be done in Australia at Mineral Technologies and also at ANSTO in Sydney, who are government-owned Australian laboratory, world leaders in rare earth processing technology, and a company we should be very proud of. And then we're talking about that for the next calendar year. So this year we're doing the bench scale test work. Next year will be the scaled up test work, which gets us to the pilot plant stage.
Oh, that's excellent. It's good to hear in terms of where it sits time frame. So our resource confirmation we're expecting will come first later this year. I noted you've intend to drill about 300 holes, 100 per site or project. How's that start? Has that started actually drilling? How's it going? And what amount of work will that be enough work to confirm a JORC resource?
So that has begun, and in fact, myself, Andrew Shearer, and Tom Davidson, myself and Andrew directors, and Andrew the CEO were on site yesterday and on the drill rig, and so basing ourselves out of Wedderburn at the moment, up in the Western Districts. Going well, going to plan. We've got a good team there and drilling as we should. The drilling that we're doing there is termed air core drilling, and which is fairly shallow vertical holes, and essentially it's an open hole where the sand gets blown up the hole, up the pipes, and we sample at surface as we go along. So we can literally stand there and pan the samples, and we can see the heavy minerals that come out. So we can do that in real time. So when you're in the resource, or at least in the mineralization. So that's underway at the moment, and so the drilling we have planned will take us through to a JORC resource. And as we discussed at the start, we're not drilling blind here. We've got a whole lot of data that is pointing us in the right direction, telling us where to drill, and so we can focus in pretty quickly. And with this technique, it's a fairly cheap and cheerful technique, and we can drill say 5 holes a day, something like that. So you can really bounce along pretty quickly along a roadside verge or the edge of a paddock, and drill all your holes sort of and get a profile through in a day. And so you're moving very quickly in terms of your resource development. But I guess the comment there is you've got to think with mineral sands, resources are measured in the hundreds of millions of tons to even billion tons in the big projects. So you're talking about big systems with long mine lives, and so you're not talking about small complex ore bodies like you have with gold or silver or zinc. You're talking about big ore bodies that require lots of drilling but are still kind of hard to miss, I suppose.
Yeah, that's interesting, and I found it fascinating talking to Andrew recently about the geos that you brought on who are sitting on the machine.
Yeah.
Sounds like there's some good guys and gals who
Yeah.
have plenty of experience in the game.
Yeah, absolutely, and we've got a good team, and the team that's working for us have got mineral sand experience in Victoria with other companies. And so, it's a specialty area, I guess, of geology, and a little different to other areas of geology. And so, having the right experience is extremely important, and having the right drills is important. And so, we've got a great team up there, and we're very confident we're getting good results and seeing what we need to see in the pans as well. So we're very happy with it.
Excellent. Well, if you're happy, we're happy, and hopefully that will be reflected soon. On that, I mean, what's it take? We all like to invest in things that become multi-baggers, 5, 6, 10 baggers. What does it take for a project like this to take it to a 10, 20, 100 bagger? What are we looking for? What's it take?
Sure. And that's an easy answer, I suppose. And really, all we need to do is point at some of the peers that are working on similar projects around Victoria or around Australia, around the world. And we can see the gap between our market cap, or our EV of market cap, of around 13 million at the moment, and we've got close to $8 million in the bank from our IPO. So a fairly modest EV. We can compare that EV to the peers that are working on similar projects, and we can see a very strong step up there. And really, the step up comes through execution. So that's about us doing our jobs properly and spending our money wisely. And that's on drilling and test work and moving through those resource stages and moving the project towards production. And it's mineral sands aren't as perhaps sexy as some other assets, because they're so large, and they're sort of, you're developing a project or a mine which is generation scale, and so you're building up towards that a little bit more slowly than sort of single holes into projects. That's not how they work. You get you don't find them with one hole. You don't sort of have one hole that changes the resource, because you're talking about such large deposits. But as we take the company into resources or multiple resources, we show that the processing technology is going to be very similar to the other companies that are working in that area, which we're confident of, but we need to demonstrate. And then we finalize some of the test work, and we show, I guess, the economics around the rare earth and the monazite process. Then all of those are great value add steps that stand in front of us, and material steps in a material business, I think, is what we're looking at. So we look at one of our nearest competitors, which is a company called VHM. VHM has been working on this a little bit longer than ACDC has. So they have the benefit of more investment, a bit more advanced, and they're a market cap of around $120 million, like that, having completed an IPO quite recently. So it's a good gap for us to sort of to move towards and fill our EV from 6 million up towards 100 million. It doesn't take a rocket scientist to work out that that's possible, and to see that gap which can be closed by our good work.
Yeah, well, that's certainly pleasing to hear. And then you got others, I guess, like Astron. I was just reflecting recently on a comment that Mike made in one of our earlier calls, and we love Mike for his experience, and certainly for introducing us to Southern Cross Gold and the results that we got there, and a terrific IPO last year. But he made a comment during the last call that there was enough. He thought there was enough mineral sands deposits in Victoria to service the needs of the Western world, excluding China, which I found quite extraordinary. So that's potentially a good thing, but then also does that not represent a great deal of competition? And to that, do we say that, I guess, we have the sites and the technology that can bring it to market in a more efficient and cost-effective manner?
Yeah, sure. And I guess there's some big themes and some big issues in that comment that, and we can, I guess, come back to that discussion on rare earths, and I can talk for a long time on rare earths, because we've got a lot of experience there. But rare earths aren't that rare, and that's a comment that's been thrown around quite regularly in the marketplace, and certainly during each rare earth boom that gets thrown out. However, the key with rare earths is to have a business plan that is a sensible, safe, sustainable, low-cost business plan. And so you've got to be financially robust. There's no question about that. But in particular, you need a business plan in the day and age we live in, 2023. You need also to have a very strong eye on the ESG metrics of your business plan. And so there's a whole lot of rare earth projects out there that really don't stack up on ESG terms. The locations, the transport they need, the chemicals they need, the complexity of the processing, all of those reasons kind of say, or extremely low grade, all of those reasons say they're projects that will never be mined. As soon as someone with an ESGI comes and takes a look at them, then they're not going to go ahead. When you look at production of rare earths from mineral sands in particular, and so that's for the Murray Basin as a whole, then what you have is a really high degree of resource efficiency. So instead of just producing one mineral, just producing rare earths from that mining site, what you get is a whole range of minerals and metals, all of which are critical, all of which are highly industrially relevant, all of which are very important to the society we live in today. So the rare earths really are let's call it a free kick, I suppose, that sit behind the titanium minerals and the zirconium minerals in ilmenite, rutile, zircon. And so the monazite sits there as a kind of free kick that comes along with it. And so we can essentially produce rare earths from the Murray Basin without any additional mining and disturbance. And so we don't need to be opening new mines that only produce rare earths. We can just sit off the back of those other materials. And so that really keeps the footprint of rare earth production down, which I think is really important. I guess the other factor that you can say with mineral sand mining is that the monazite is really high grade. So rare earths in monazite are about 60%. So of that brown sand, about 60% of that is rare earths. And so it's a really great feedstock. So you can, and then the other 40% largely is phosphate, which goes to an agricultural product. So really, all of that brown sand is going to end up on a customer's table, and it's going to go into a marketplace, which I think is really important again from that ESG brand. And if you compare that to some of the other style deposits, let's call them the clay-hosted deposits and things, and so that's about 1,000 times higher grade than the clay-hosted deposits, which means we have to handle 1/1000th of the material to be producing the same amount of rare earths. And again, from an ESG footprint, that means we can be really intensive. We can have a great process to solve the problems of that single material. And the footprint of the mining can be absolutely minimized. So I think all of those things make mineral sand mining the logical way ahead. And so we're seeing it in Australia. We're seeing how well Iluka's doing with their project at Eneabba in WA. Yeah, great project, great idea. We're seeing Base Resources and their work in Africa and Madagascar really doing good things. So we're seeing a number of companies that are sort of thinking about this now, and it's really about that resource optimization. If us as a company and as a people and a planet are going to be mining, let's use everything we possibly can that comes out of the hole when we do it, and that's how we reduce the impact of mining overall. And this is one of those steps that can do that.
Yeah, that's really good to hear, Mark. You and the team talking about and doing things that in that ESG space and ticking all the boxes. I mean, from an investment point of view, and investors these days, it's a big ticket item, and where people are increasingly taking a lot of notice on company performance around this area and what's happening.
I guess my history in rare earths is quite well known, but myself and with my cousin as well, we ran a company that was doing exploration in Sweden in sort of 2009, 2010, and we made a very major rare earth discovery there at the time. And I was CEO of that company, and we had a share price that went from 20 cents to $6, sorry, and it was a great success. But I went around and I spent a lot of time with all of the customers in Europe that were looking for rare earths. And at every one of those meetings, and they're all the household brands that you can imagine of German companies and auto companies, and And the conversation was always, oh, we want you to be successful. We want your rare earths, but you've got to be competing with the Chinese. You've got to have the same price as the Chinese. With now where we revisit those meetings, that doesn't even come up. Price is no longer the first conversation. The first conversation is, please show us your sustainability strategy. Yeah, please tell us about your ESG metrics. And price is much further down the list. So I think there's and there's many factors that's occurred that has caused it to occur. But we can Ukraine and Russia and China and COVID and everything else. But we've now seen that disconnect between what's happening in China and what's happening in the rest of the world in rare earths. And we're going to see the two stories, I guess, separate more and more as we go ahead. And so being highly competitive in our own ex-Chinese marketplaces is important. And some material will cross over, and that will always happen. But I think we're going to see two streams developing. The Chinese demand for rare earths is extremely strong. They're going to be using what they produce in country, and that's got its own marketplace. And then there's a great build up in demand outside of China as well. And we're seeing US has been a leader, EU's been a leader, and in the US we're seeing a lot of investment in magnet making, which has been lacking outside of China and Japan, and that's now being built up in other centres. And so I think lots of exciting times in rare earths and critical materials in general.
Yeah, absolutely. Some really, important macro issues emerging there you touched on, and a lot of countries and business want to do business or be independent of China and that type of thing.
Absolutely.
So it's exciting that Australia and then companies like ourselves, ACDC, are moving in to take up that space, particularly with the technology and the resources we've got. So, really exciting. Jumping on a different tangent for a moment, tell us about, I know some shareholders, but tell us who roughly, without breaching too much confidentiality, who makes up top 20 shareholders, and are they sticky? Are they sticking around?
Yep.
Or are they ready to bail at any given moment? Or
Sure, and certainly the major shareholders are all under escrow, which I guess we can certainly call them sticky shareholders, and so that's the set of project vendors are obviously under escrow. Medallion Resources, a founding shareholder and is under escrow. Myself and Andrew Shearer, who worked with the company for a good period before we got to the listing process, we're both major shareholders sitting at sort of the 5% levels. All sticky shareholders. Certainly in our IPO process, we were certainly able to share with the major shareholders, I guess, the vision that I've been expressing here, that we're not about single drill holes. We're not about sort of live or die on testing a project. We're about building a momentum and building a business plan, and I'm sure all of those shareholders that heard that story in the IPO process and we marketed heavily during that time, are sticky shareholders. We certainly haven't heard otherwise, anyways.
Yeah, for sure. Well, look, I'm happy to stick around if you can do a repeat and go from 20 cents to $6. I'm sure you'll have quite a good fan base. So, not that we're expecting you to do that in the immediate future.
Yeah,
but
no pressure. Okay,
no pressure at all, of course. One of the things, unfortunately, we've seen over the years is when we invest in things and go along for the ride, there's a stack of information. It's almost like trying to drink water from a fire hose initially, just lead up, seed, or the IPO. But then once a company floats, it's like radio silence, and you hear nothing, and there's not a lot of investment made in investor relations and marketing. On that note, what can we as shareholders expect from the company in terms of news flow, updates, that type of thing?
Sure. And I certainly take that point. And companies go through cycles, and when we generate good news flow or lots of news flow, and other times we don't. And so it's bridging that gap is not easy as a company executive. But certainly for us, we've got the money in the bank, we've got the team, and we've got the work plans in front of us to be able to provide a really good set of news flow as we look out over the next sort of 2 years even. So at the moment we're drilling, and so drilling always gives good news flow, and our knowledge of the project means that our hit rate, we certainly are quite confident it's going to be a high hit rate in terms of our drilling. At the same time, and in fact it's already begun. Sorry, we're doing the let's call it the metallurgy, or the physical metallurgy, to separate the heavy minerals out of the sand. So again, that's already started with Mineral Technologies. One of the owners of the projects that we purchased had drilled there in the past and had retained all of the samples, and by having access to that sample, we were able to sort of jump the gun, move ahead quickly at the start of the IPO process, and able to get that to Mineral Technologies for the start of processing. And so that's a really key step, and to tell us about the minerals that are in the sand, and what we're going to do with it next. We'll be moving through into scoping studies, economic studies, pretty quickly, because we have a really good data set on our knowledge of the projects, our knowledge of the separation technology, of the processing technologies, and the monazite technologies. We have a good knowledge of that. So we're able to move through all of that phase very quickly. And then once we sort of achieve that scoping study level, then that really tells us where to maximize our investment at the next stages, and which project will be the focus for us. And then we'll be back taking an inferred resource to an indicated resource and higher levels, and then moving through the further test work and expanded test work in 2024.
Yeah, excellent. Good to hear. And what I'd like to ask about also is, particularly in terms of these early stages, is costs. Now, I really liked you hearing you talk about cheap and cheerful in terms of cost, not of course of product, but in terms of our drilling and air blowing and that type of thing. You got about 8 million in the bank. That's excellent, but that's all relative. Where does that get us in terms of our costs, our cash burn, and some of the things you're talking about, getting to resource, getting to pilot, and all that type of thing? How long does that last? Where does it get us?
Yeah, sure. And really, it's about at the moment we have let's say 4 key projects, 4 key areas that we're looking at as resource projects. And so we're drilling. The first program is kind of a scouting program, just a sort of confirmation program. And once that's complete, then that will give us a best idea of which 1 or 2 projects to focus on and have that early investment. The drilling is, as I said, it's cheap and cheerful. We can get a lot of work done with limited staff, limited drill rigs, and so we can move quickly there. And then as we expand at the back end with the process side, that's where some, I guess, larger costs come in. We're looking. We certainly have no plans for any money raising. We have no need for it. We're looking at least a good 2 years before we sort of need to do that, unless we I guess commit to a project acceleration, and that would be great as well. Like if we can identify the place where we want to be building a monazite processing plant, and we identify that early and it's the perfect place, then pulling some of those longer lead time things forward would be a great result, and would be very keen to do that. But obviously that's not in the plan at the moment. Yeah,
okay, that's good to hear. Just as a lay question, we've talked about the heavy mineral sands. We've talked about the monazite and the rare earth component. So, what, in terms of roughly of the percentages of revenue or revenue streams, is there a mainstream, or are they going to be joint stream? How do you see the breakup working? Obviously, depending on results, but what might that look like?
Sure, and that's a hard question, and it's not and I'll put lots of caveats and disclaimers that it's based on previous experience, and it's not really based on my knowledge of what we have at ACDC. It's a let's call it a view of the whole marketplace. So every mineral sand project is a little bit different. The ratio of minerals is a little bit different. When you look at the monazite itself, the range of metals inside the monazite is a little bit different. There's a few key metrics that we know of, and based on our experience, we know what to be looking for. But if I was to say a typical mineral sand project in the Murray Basin, I would be saying that the business plan that we're executing on, where we add full value to the monazite, will be adding 40% extra revenue to the project. So yeah, let's call it a very significant number anyway. So it really bumps a lot of extra revenue with a fairly low. It's a low volume, high value material, and so we're talking the main value of the rare earths in these products is neodymium and praseodymium. They're selling for like $120 a kilogram. So you've gone from a brown sand in the Wimmera to a product that's worth $120 a kilogram. So it's a really great step up in value. So if you can capture that process really well, then you're adding a whole heap of value on.
Yeah, that's a pretty amazing, and it's not an insignificant value add at around, even using broad numbers, not insignificant at all. And do I recall correctly that you're also able to, if you need to, you could process the monazite without, you don't even have to drag it out of the ground yourself. Once you've got the facility up and running, that's another potential revenue stream as a mere processor. Is that right?
Yeah, absolutely. And the license agreement that was transferred from Medallion to ACDC means that the two sides of the business can sit separately, I suppose. So the monazite process is able to accept monazite from third-party sources. So it can be taking from the other competitors in Victoria. It can be taking from any other project anywhere in Australia or the world. So it's not limited to ACDC's own projects. It can be taking all kinds of feedstock from around the world. And so, yeah, it's a very good point and a great value add that we can see that we can be buying material that's currently sold to China. We can be the customer of choice for those materials coming into a port location in southeastern Australia, processed by ACDC and capture that value add step, turning it from the brown sand into the magnet ready material.
Yeah, I mean, that's a pretty big deal, given that no one else can really do that outside of China. Is it,
correct. There's the only place that's doing it outside of China is a place in Utah, and Utah is obviously a very landlocked location and in the center of the US. So yeah, transport logistics are not ideal. Certainly our vision and certainly the way we're approaching the business is to put our facility in a location that really is perfect to be able to receive those materials from other locations. And we're not disclosing what that location is yet, but it's a very logical location within southeastern Australia and a place where you can certainly aggregate monazite from competitor projects as well. And that means we can go from I guess in our minds at the moment we're talking 10,000 tons a year or something of monazite. As the demand grows, we can greatly scale above that, and that becomes a very material business.
Yeah. Okay. Terrific. We're getting near the end. This may replicate some issues, but I'm an investor and I'm looking to suffer from exposure to rare earths. I've obviously there's some established companies out there, Lynas, Hastings. There's some emerging ones yourselves, VHM, Astron. Why am I choosing ACDC?
Great question, and a great investor question that we often get and should get. The things that I would point to would be we've got the mineral sand assets in Victoria where we can add immediate value. So we can see a re-rating by turning early stage projects into advanced projects. We can do that with the investments we're doing at the moment. We have access to a technology that allows us to add maximum value to the rare earth component that's coming out of the ground. We're able to take other feedstock from other people, and so again, a great value add step. Medallion Resources, where the technology came from, is a shareholder in ACDC, and so they're highly motivated and provide us with the knowledge and the staffing to know how to execute on this. So that's a great value add. Just completed the IPO. We've got plenty of cash in the bank and put together a really good team to get this done. And I suppose we can look at the macros of what's happening in Australia, what's happening globally with the energy transition. The energy transition is creating a demand for a whole range of materials that almost didn't exist in the past. Australia itself is in a great position to benefit from that, and I think we'll see over many years, but Australia is going to be moving itself more towards green materials and green processing and renewable power. And I think what we're doing and what other companies are doing plays into that story extremely well. And it's a great and exciting thing to be part of. So I think lots of factors will help our success.
Yeah, thanks, Mark. That's a really good response. I do note that you left out one key part, and it's not surprising given that you're quite a humble person, as I understand, and that is the management team and the people you've got involved. You know, you've got runs on the board, some big runs on the board historically. Yeah. We've got a real brains trust of knowledge and experience here that sits across the top of all this, and to me, that's really exciting.
Yeah, and we've got a great board that's done other things and been very successful in the past, and with a real focus on ACDC now. And for myself, I've had coming up to 15 years in the rare earth industry, and so I've kind of forgotten more than I've known, and coming back to the industry has been really exciting for me, and I have great connections and across the world in the industry. We've got Andrew Shearer as chairman, and you mentioned Andrew before, and Andrew's had great success building companies up from essentially shells into very successful businesses, Andromeda being his big one. We've got Ivan Fairhall, based in Brisbane, who's a mining engineer and running a gold company. And we've got Richard Boyce, who's out of Melbourne, who's accounting background and very good on the compliance and the back office work, and also very, very strong on the business planning, that's sort of keeping us hitting our goals and making sure we're on track in terms of timelines and budgets and things. And so and very much a shout out as well to the CEO, Tom Davidson, who's come to us from an engineering background and a really strong history in delivering big projects. And we chose him because he's the right age and stage and building his career with wanting to execute on this company and these projects.
Yeah, excellent. And I guess that's a good wrap up. Just finally, I mean, we've seen rare earths have come and gone a little over the years. It's cyclical. For the cynic asking, well, it's another bubble that will burst. I mean, it's somewhat an obvious question, but how would you respond to that in terms of the place that rare earths have to play in our global economy and production going forward?
And I would say cynicism is fair, and so and that's what drives investors to be selective in what they do with their money, I suppose. And so rare earths has been cyclical because it's been a very small industry in the past. And small volume but high value materials and with a high volatility has caused sort of heroes and villains, let's say, as you go along. But that's looking backwards. And so when we look back at the last rare earth boom or bubble, which was 2010, 2011, when prices spiked up, that was entirely political. That was a political game being played between China and Japan and a little bit the US. And so it wasn't really about fundamental supply and demand. What we're seeing now with the pull up in pricing and the run up in price has been supply and demand driven. We're building more vehicles that require more rare earths, and we're going to be building more and more in the future. And so and more wind turbines and more devices that are consuming rare earths. So really quite different to the last time. And so I don't think we'll see that crazy spike that we had last time, but we're going to see extremely attractive prices. And we've got to remember, these are industrial minerals. We want to find a place where the customer's happy and the producer's happy. If the price goes up too much, then the customer is going to walk away from those products. They don't want them. And so we've got to find that happy place in the market. And the market in volume and in price is building to a place where it's much healthier than it was in the past. And so I think we can all be a lot more confident that the market will be more stable. There'll be more producers outside of China, and the prices will be a good position where customers are saying, yes, let's use more rare earth magnets. I think we're heading towards that.
Yeah, that's terrific. Thanks, Mark. And look, thank you very much for your time today and your honesty and transparency. And circling back to my initial question about buying at the current levels, we're very confident at these levels, picking them at a discount, and it's buy from us. So thank you kindly.
Thanks, Shane. Appreciate the time.